Hey folks, welcome to the Pipnotic Symposium on the 3rd of June 2025. Okay, so today we're going to talk about ASR. I had some questions come in again about ASR. I just wanted to talk more about that because we've had some major changes in the ASR, kind of the engine, the core, and it's resulted in some pretty phenomenal results. We've only been running it now on the new configuration for about a month. But I posted an article or a post on the website pipnotic.org. So go there and go to the blog. I'll show you there what it looks like. Excuse me. You can click here on Mr. Winston Churchill, and here you can read a little bit about it. And this is a little bit about my journey developing this piece of software. But the results for the first month look like this, which is really, really good. I'm super happy. So we have average over 60% hit rate on the Algo, which was remarkable. Does it lose? Of course it does. Every Algo loses, but it wins more than it loses. So that's all you need to print money. And so what it's doing now, it's looking at these extreme deviations in asset strength. And it does it in a way that enables it to identify the end of these cycles. And so it's waiting for these cycles to complete on the asset strength histogram. I don't have it on, but we have a zero line, and then you have it kind of moving above and below the zero line. And typically, where you have the end of one of these cycles, I'll just do it here, it lines up pretty nicely with the end of these price movements, and you'll find that it aligns beautifully at the tops and the bottoms, the peaks and the troughs of price action. And so what it's doing, it's waiting for prices to be negative, and it's waiting for specific patterns to occur down here at the extremes, both higher and lower for buying and selling. And then it's taking the data from the histogram and it's running it through like a statistical model, and it's looking for extreme deviations at these levels. So it's not only looking at the histogram, it's looking at other things as well that enable it to qualify these entry signals. And it's doing so with great success. If I just put one of the other indicators on. Okay, so what it does, I have this little indicator I've written just to help me visualize things, and it waits for these little patches to occur when the histogram is in the buy zone or the sell zone. And when that happens, it simply gets in a market, either buying or selling. And it works pretty efficiently. And if we look at the results from the past month, so this is from January, February, March, April. So this is a month of trading. If we just grab a couple of these, I think I already looked at some of these. In some of these, you can see how they occur. I mean, here, this was a buy entry here, and we got in here, and we got out there. I mean, prices went on forever. These are 1 hour signals. Here we have another one here. We had the entry, the exit, and just price kept going. And so it's really, really efficient. You see we have another example here, buy here, we got out there, and price kept going. This is often what's happening. And of course, we're going to get some losers. Actually, that was a different here. Here we have, it was a buy. This was, what was this? This is an hourly time frame. Here we have a little loser, another little loser. I wonder why these positions are so tiny. Here we have another one. Here we had another buy here. So prices were down according to the configuration. This is on the 4 hour chart. Yep. So we bought right here, and then prices kind of moved away nicely. Here we had a loser. Let's have a look at that. That is on the 1 hour chart. Here, and it wanted to buy there, and prices didn't turn around. But that doesn't matter. That's our tuition for trading. Okay, and this happens sometimes about 35% of the time it'll lose, but most of the time it's winning. And this is causing our equity curve to continue to increase, which is remarkable. And it's working well. I have it running on several accounts on my VPS, and I let it take the trades. and then I'm normally just watching the trades manually. Sometimes I leave them, and other times I get out of the trades a little bit earlier, depending on what the market is doing. But it has a trailing stop, and you can make that, a break-even stop, and you can make that trigger a lot earlier so that you're protecting the position. But I wouldn't do that. I would let it breathe, because you can see that when prices move, they're not going up and down in a straight line. They don't do that. They do this. We go and we give a little bit back. We do more like this. This is the reality of the way price movements. Is not going like that or like that. Okay, so it's important to understand that. So you have to have patience. So if you're managing these manually, what you could do is you get up in the morning, you load the data, and then you switch it on and you just watch it while you're in front of the computer, and then you can simply go in. This is what I'm doing, and then I just let it pull me into trades, and then I keep my eye on them throughout the day. This is a trade I think this opened yesterday. Yeah, we bought down here. This is a 1 hour entry, so it got in. It may be somewhere around here, I'm guessing. And now we have an expectation that prices are going to wriggle higher from here. We have like a little bit more dollar strength. You can see here the dollar slowly, well, not so much here on the longer term, but slowly beginning to pick up. And here we look at the CAD. Where's the Canadian dollar? Right there. The Canadian dollar seems to be picking up on the smaller time frames. And you can see that we've had this prices moving down here. But I think as time continues, that we'll continue to wriggle higher from here for a little while. Where's a likely place for this to happen? Well, we've got some pretty interesting structure right there. So I reckon prices will go to there. So I'll probably take my target and I'll move it down there, or I'll just close it off there when price gets there, because I'm going to be here for a little while longer. What time is it here? It's 3:45, about 15:45 Singapore time. So I'm just going to watch that, and then I'm kind of done. Okay, I don't fiddle so much with it. I leave it. I find, as a matter of fact, that when I fiddle with the trades and I close them out early, that they almost always end up going to their target. So it's best not to fiddle. Just let the stop loss kind of hit its break even, so you're not at risk on a position, and then just let it do its thing. But if you have conflicting information, news comes out, because this is not looking at news, this is just looking at maths, then it's okay to close it out. If you have a position that's floating around the break even and a dollar is a part of that currency pair, and we have jobless claims coming out, maybe you might want to pull that off, because what's going to happen? Liquidity is going to dry up and volatility is going to increase a lot, and so maybe it's a good idea to close that off. But as long as prices are moving and liquidity is thick, which you can see normally by looking at spreads, then you should be in good shape. Okay, if we jump to the dashboards, and here we can see all of the information related to all of the algos. So now I ran this today, we've got fresh signals in there. We've got asset strength histogram on 3 time frames, monthly, weekly, and the daily. We have buy and sell zones. These are all the live positions. And these are, here we have, it's taken 2 trades today on the Aussie Kiwi. And then here we can see equity growth since I started recording data, which was the beginning of this year. Then we have the ASR, which is the same. We can see here that we don't have any positions today. And here you can see the equity growth. We kind of started slow, flat. We have these big jumps as some of these big winners come in. And this is probably maybe some break-even stops or some smaller accounts taking losses or hitting targets. But it's pretty flat. So we have this plateau, increase, plateau, increase, plateau, increase, or whatever, or decrease. So this is a really nice way to follow along with this. Matter of fact, I have a gentleman who wants to invest his money on the Algo, and so he's going to be putting some money on the algorithm via my account. So that's pretty exciting, and it's quite a significant amount of money. So we'll probably see these positions, the winners and the losers, be slightly bigger as a result of that. But it's really good. It's very, very good. And I have confidence in the algorithm now, and so I'm allowing for that. I'm allowing people to allocate more money to the algo. Yeah, so take a look at it. If you're not using it, I encourage you to use it. Use it carefully. Don't get greedy. Use a little risk, 0.5% per trade. If you have, in the default configuration, it's set to trade 2 pairs that are exposed to the same currency. You can reduce that to 1 if you like, or you can increase it, but I would be very careful because sometimes the dollar just tanks and you don't want to get into $10 positions if the dollar is going down. You want to have limited exposure to the American dollar and maybe have more exposure to other currencies that are doing something else, just to help spread risk a little bit. And I've added a new feature where you have to, if you're running it on a live account, I advise that you do so cautiously. And now you have to, in the settings, you have to say that I'm going to allow it to run on live money. And I'll actually put that in here so we can take a look at it. Okay, so now I have the histogram on here. So if I whack this on there, and you can hear that doodle-doo. Okay, so here it says now, please use a demo account to avoid losses. So you have to get in here. I accept live account risk. And you set this to true, and then it'll go away. That it will no longer sound that alarm. Okay, but you can see here, this is interesting. I mean, here's a signal here, which lined up pretty nicely with that one. Depending on the configuration, we may or may not have gotten into that. And so, yeah, it's looking at these things and it's working very, very well. So I encourage you to use it. Be careful with it. It's not a toy. It's a really powerful algorithm, but just be careful. Okay, have realistic expectations. Don't risk, 10% of your account per trade. Be risk averse, and remember that trading is about preserving capital. And this is something that you need in order to stay in the game for a longer period of time. Okay, well, I'm going to leave it at that. If you have any questions, please let me know, and thanks once again for watching.